There's the bell. Happy 6,000. We'll talk about kind of that top here that we've actually hit today, over 6,000 on the SPX. Welcome to the class on trading, growth, and value. This class is not a one-off, it's weekly. So we invite you to come to this class each week. This is live and also being recorded as well. And I'll share with you that link where you could actually bookmark it. And that way you could just kind of always know where those classes. Okay, so we also have an archive of prior classes, and I'll show you that momentarily. We also have Connie Hill in the chat. We welcome her, and we also welcome many of you here today. Some of you mentioned you're down in Georgia, and there's snow outside. Yeah, Destin, Florida, saw on X that on the beach there wasn't sand. Well, there was sand, but there's snow on top of the sand. That was pretty amazing to see. I have been in Tallahassee, Florida, for work, and it was snowing down there, and I thought that was quite amazing. Okay, yeah, so maybe that the climate change is real. Okay, so who knows? I'm in Salt Lake City, and we haven't had that much snow. If at all, Florida might have more snow than we do. Now, just real quick as we get started here today, remember the information here is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. Remember that many people start with technical analysis because it's probably maybe the easiest to absorb, but that doesn't necessarily mean that it's an ending point. Okay, it's one analysis, but there's other analysis like fundamental analysis, macro analysis, where you look at news and how it's affecting markets, etc. There's also inner market analysis, where you're looking at relationships of asset classes together. And the great thing about being an investor over time, you learn those different analyses and you actually use them, or can, in combination with each other. Very interesting. Now, also remember the Paper Money software application is provided for educational purposes only. We will be using that and have been using that. Remember, dividends paying stocks, they may reduce or stop paying dividends. Okay, so this is that's a risk. Okay, now they could also raise it as well. We just don't know. That's kind of up to how the company is doing and the company's stance. Now, also remember that investing in stocks involves risk, including loss of principal, past performance, no guarantee of results. Now, I want to talk about really today about growth, okay? And I'll tell you why we're going to talk about that. Many things have, in the last week or so, we started getting about probably 4 or 5 days ago, started to get a pretty good move off the bottom. And we've seen some of the discretionary stocks lead to the upside. Many stocks have been in V patterns. I talked about that on the market wrap on Friday. We talked about 4 technical signs of bottoms that we mentioned, okay? And we also talk about W patterns, divergences, diagonal resistance, so that way you can have some confidence with what you're seeing on the chart. I want to kind of take that conversation and go forward here, talking about some continuation, and I'm going to be focusing on some growth names and some specific areas. And normally I don't come into a class where I know exactly which ones we're going to look at, but I do today. Okay, now let's kind of just take a quick look real quick. Now, some of you mentioned in the feedback forms, and thank you for filling those out, that you like that kind of routine that we do. So let's kind of just take a quick look, okay? So the first group on the left-hand side, what's the major takeaway? The SPX, or I should say indexes. From the indexes, which I did include the SOX. We include the SOX for the semiconductors. We have that in the indices or indexes. We also have the SOX in the sentiment. Now, the SOX is going up. That'd give you a pretty good indication of maybe what the NASDAQ is doing. Pretty good correlation there historically. So if I looked at the SOX and said, geez, of the indexes so far, which on a percentage basis did the best today? Well, just real quick, we could see semiconductors. We just said that yesterday as we were smashing our way into that horizontal resistance. We said we would not be surprised to see that actually go higher. Did we know it was going to happen today? No. Just kind of said, look, if you keep hitting the wall of resistance over and over and over again, and the MACD is the highest level it's been in a while, there's a pretty good chance we could smash our way through that ceiling. Okay, we'll come back to a stock in there in just a moment in that space. How many of you saw that movement in the SOX? Now, if you set up your list, like I told you to in homework, you could say, James, I was on top of that. I saw that. Okay, great. So there's a point of doing the homework. Now, if we look at the NASDAQ, second one on the top, percentage-wise. Okay, so I just ranked this percentage change. On the NASDAQ, what you're going to see there is a little pop there, a little gap up. Thank you, Netflix, many of you might say. Rally to the upside, was a little bit higher. I saw BJ's question. I'll come to that in just a moment in the next symbol. And a little fade off the top, okay? But still higher day over day. SPX, when we take a look at that, and this is where I'm going to bring in BJ's question, okay? BJ's question was in regards to, James, yes, the morning was nice. We saw a gap, but there was some fading off the high. So it looks like when we got to about 6,100, some investors, well, let me say it like this. We saw it rally to 6,100, and then the price faded. Why do you think that is? And BJ's asking if we should be concerned. Now, it's just a question. I'm just reading what BJ has asked. So first off, I want you to remember this quote, right? If the price goes up and in the shorter term, it makes a higher high. You get an HH, a higher high. Okay? You make a higher high in the shorter term. The highest likelihood, okay, is to make a higher low. Now, say that out loud. Make a higher high. The highest likelihood is to make a higher low. Now, wait. HH, higher high. HL, higher low. Now, wait. If you have a higher high and higher low, what does that potentially equal? That's what we call the T. Or I should say the uptrend, up T. Okay? Uptrend. So if you're saying, hey, should we be concerned if we faded a little back off the high? Well, not if we just made a brand new high. No. Okay? If you made a higher high, the highest likelihood is to make a higher low. Why? Well, because as people see the higher high, they're wanting the price to do what? What do they want the price to do? Did they get in? Did some of them not get in? Well, yeah, some of the people want the price to kind of fall back down a little bit. Why? Well, because they're trying to get in. So if they get a little short, shallow pullback, they might use a little pullback, maybe off a moving average or so. And if it pulls back, they might try to buy the dip. If they buy the dip, all of a sudden the price makes that higher low. So really, when we go from a high, that where we were at the high might correspond with where the shorter term investors had a target. Okay? So if we said, well, geez, when we got to 6,100, it looks like people just stepped in and started selling. Well, that's kind of what shorter term investors probably use that swing high target. Okay? Now, just because they started selling at the 6,100 doesn't mean that the trend is over. Probably not. Okay? Just because those short-term investors sell doesn't mean there might not be ammunition to rally even up higher. Now, so that's my answer to BJ's question. So number one is, I'm going to tell you right now, I think it could take 10 years plus to really understand trend. Now, that might shock many of you, like 10 years. I'm 70, okay? Well, hopefully you live to 80, myself included. But understanding trend and having confidence in it to invest in it in the paper money account and so on, that comes through time. Okay, I could say the words like that, but you might not have any confidence to practice that. Okay, so I'm telling you, it took me some time to understand it. So I'm not acting like you should get it, but hopefully over time it starts to kind of go to your mind and you're like, okay, I get it now. Now, if we take a look at just real quick, the VIX, non-factor, 15, like it. Okay, you look at the Dow Jones. We talked about the US dollar falling down a little bit. Dow Jones has been on the move to the upside. Multinational companies enjoying the dollar kind of fall. We talk about sometimes there can be an inverse relationship. Not always. Okay, not always. But overall, kind of liking that. And the price above the 10-period moving average. Now remember, the price being above the 10-period moving average is the common denominator in all the trade examples you try to look at. Let me repeat what I just said. Price above the 10-period moving average is the common denominator. The only time that's not true is when we talk about doing cash secured puts, or let me say this, option type strategies. Okay, I'll leave it at that. But you better be confident about horizontal support. And there's some risk with that. Okay. But when we're talking about stock trading, we're talking about looking for the price above the 10 period moving average. Okay. Just shooting down the middle here. Okay. Now, if you look at the Russell, kind of a little give back to the midsection. Not much to say there. Japanese yen faded back a little bit. If you saw the yen crosses CAD yen, Aussie yen, Kiwi yen, pound yen, so on. Pretty franc yen. Pretty nice day where the yen kind of weakened a little bit. And why does that matter? Because we look at that as the international VIX. So if you're a stock investor, you probably saw a lot of green things out there today. Now, when we look at, let's say, just real quick, the Dow Jones, and we looked at in the trend column and said, how many stocks in the Dow have trends 2s or 3s? And the answer is, hallelujah. Okay, that's what you might be thinking. Okay, now, trend 2, price above the 10, but not above the 30. Trend 3 is price above the 10 and the 30. Now, you might be thinking, is James really like this? Now, the nice thing is, as you get older, you don't need a lot of friends. Sometimes, if you're a funny individual, you can entertain yourself. And some of you know exactly where I'm going with that. So there you go. Okay, now, the one thing you're going to notice is there's quite a bit of relative strength here. CRM, which we're going to talk about, American Express, Microsoft, and so on. You're going to see that there's a whole bunch of tall hold, call holds, couple brand new highs there, 5 to be exact, and we see a bunch of green. Oh my gosh. And by the way, green boxes. And when you look at the green boxes, 3 days, 2 days, 5 days, 5 days, 4 days, 4 days, 2 days, and so on. And when you look at the breakouts, right? Continuation from yesterday's breakout, today breakout, continuation from yesterday breakout, and so on. There's a lot of stuff to talk about. Now, so we don't waste any more time. But I just want to kind of show you that. And the last thing I'm just going to say on sentiment gauges, when we talked about the number of stocks above the 50-period moving average, how they were at the extremes of the number of percentage of stocks above the 50-period moving average, we correlated that to the VIX. It's been nice to kind of see that that was kind of timely. Now, we'll have to kind of see where that goes, but that sentiment watch was kind of helping us out. And by the way, the SOX also kind of giving us some further ideas, but also the VIX. Anytime you're above 18, anytime you're probably above 21, the higher up you go, the more likely you are to mean revert back down. Okay? So it's very important to kind of watch that. Now, what I want to do is I want to pull up just real quick a couple. We said a sector yesterday. I'm just going to kind of isolate this. When we look at the sectors just briefly, the one we're kind of watching is IXC, communication. Now, our first example that we're going to look at here today is some of the stocks that represent that sector. Now, if I went to, let's say, IXC, pulled up Analyze, and I looked at, let's say, fundamentals, you might see a list of stocks if you're using a different ticker. This is an index, so we don't get that. But if we use a different ticker, we could probably get a listing of what is in the communication sector. Now, Connie teaches a class on Friday afternoon on ETFs. She talks about that. Kevin and I, on Friday morning at 9:30 a.m. Eastern, we talk about that. We invite you to both those classes, but those are live only, okay? Now, in our first example that we're going to pull up one of the stocks in that area. Now, if you look at this right here, you're going to see that we have an upcoming earnings on January 29th. Now, if we look at this chart, and we're going to look at its fundamentals, okay? And I'm going to give you like a quick story that's kind of funny, okay? So first thing, when we look at this kind of trend, we'd have to kind of say that maybe the longer term trend kind of looks something like this, okay? Then if you kind of looked at the top, maybe it's a little horizontal, okay? Now, when we talk about businesses, the reason why we tend to kind of focus on more larger cap companies is, number one, is we want big income statements, like revenue in the billions. We want lots of earnings per share and growing. We also want lots of assets and equities, okay? Now, the reason why I kind of say that is we also want companies where you can't really replicate them very easily. So let me give an example. The other day I went to Home Depot, okay? And I walk in, and how many of you have heard of the Milwaukee Pack Out? Okay, it's like a tool set, okay? and you put your tools in these little boxes, and there's little latches, and there's different configurations, okay? And next to the Milwaukee Packout, there's the Ryobi toolboxes. And right next to the Ryobi toolboxes, there's the DeWalt toolboxes. And to the right of the DeWalt toolboxes, there's Stanley. So you had 4 companies that were replicating the exact same thing, plastic toolboxes with little latches and configurations. Now, the reason why I bring this up is Milwaukee really got there first. And then their competitors, Ryobi, DeWalt, Stanley, and so on, they copied Milwaukee to try to eat away of their sales. Now, why does that matter? Well, that affects maybe the technical trend. That also affects the fundamentals. You affect the fundamentals, it might affect the technicals, and so on. So we're going to start with Meta, because when we said, well, who are the companies that really eat away or tried to duplicate Meta? And by the way, some things, it's hard to really duplicate. Even if, for example, you said, hey, I'm going to go out and try to replicate Meta and build it overnight, it would take a ton of time, it would take a ton of money, and you need knowledgeable people that actually have the skill set to even do it, and you might not even get there, okay? So the focus that we want to have is really picking up or trying to find companies where it's hard, they call it having a financial moat, where maybe the business has patents or trademarks, or just the product or service is different and people congregate to that business, okay? Now, what I want to do is when we look at Meta from a fundamental standpoint, there are some companies that, yes, they're classified on a certain sector. They're classified in a certain industry group. But when you really look at its competitors, it's very difficult to do because there's sometimes not really companies that really do what they do. Example given, who's Amazon's competitor? That's online. Now, you could say Walmart. You could say Sam's Club, same companies, right? But if you said who, Costco, you got to go to the store, right? So it's kind of hard to say like who's like Amazon. We'll come to that in just a second. So our focus here is what we're really getting to is like we're trying to find companies that are hard to duplicate. It's not Milwaukee Packouts with plastic boxes. Who kind of has some advantages of management, product, and service. You're not just going to duplicate it overnight by making a plastic box like Ryobi did, DeWalt, and Stanley. Okay? Now, I'm going to go down just real quick too if we look at this. So when we look at the historical earnings, remember, this is historical, okay? They beat it. Remember, it's historical. But we kind of want to know really kind of going forward, what's the upcoming estimate? Well, 677, 542, 593. 632. How does that compare to down below? Okay. Now, the one thing is, Meta had pretty big capital investment and they invested in trying to do AI and many other things, and it took billions of dollars. That investment is not always the same indefinitely, and there might be returns from that investment. That's the idea. And that's maybe what the company is thinking as well. Now, if we go down right here, you're going to see that Meta is classified or categorized to Google and Baidu and Match Group and Ziff Davis. Never even heard of it. So this is where sometimes like certain companies, they don't really have a good categorization of truly similar stocks. Now, if you find companies that are better aligned with what Meta does, you could just go to the next page and then type in the symbols. Now, if you look at, let's say, the priced earnings, and it's funny because many people have been saying this, so many things are overvalued. And I'm like, since when did you become an analyst? Okay? Tell me any way you could actually figure out what that stock price should be given its current fundamentals. I don't know. But we repeat things like, oh, since it's high, it must be overvalued. You don't know that. You'd have to look. Okay? You'd have to look. You can't just say something and say, that's true, okay? Now, if you look at what we're trying to focus on also is growth. Now, this is a forecast. The EPS growth forecast for the next 3 to 5 years, 17%. We're going to come to Google in just a second. Net profit margin, 36%. So we're going to focus on Meta and Google, and those are two stocks that are in the communication services. Those were also two stocks that were pretty strong historically, at least the communication sector was. And then lately, it's kind of been getting in the right end of the ascending triangle. Now, a lot of people kind of might say to this, oh man, it got earnings that, we don't know what it's going to do. This is very important you understand this. This is our concern about investing in small cap companies. Where if the small cap companies don't have continuation of revenue, their earnings per share could be all over the place. I mean, all over the place. We're trying to look at businesses that have contracts in place where they could take variation in the economy and things like that, where they have a higher likelihood of still being positive and not having such a vacillation in earnings per share. Okay? Now, clearly, this is not utilities or staples. Okay? We need to understand that. Now, what we're going to do is we're going to right-click on the chart. We're going to go to Buy Custom. We're going to go to With OCO Bracket. Now, if we did it with OCO Bracket, that means we're going to put a target and a stop. Now, in our portfolio, which kind of, let me give you a little flavor of some of the stocks that are in here, okay? And I'm talking about stocks, okay? So when we look at kind of what's in the portfolio, we've got shares like IBM, Cisco, Starbucks. Now, by the way, this is in the last 3.5 weeks. This is almost all of them, okay? Starbucks, CAH, we bought 2 weeks ago. Google, we might add to it. GEV, only 15 shares. It's actually 676, not bad. United Healthcare, bought 2 weeks ago, and Halliburton, and so on. Now, what I'm going to do is we're going to add to that stock list, okay? So I'm going to bring up Meta here, and I'm going to right-click on the chart, and then we're going to go to, say, Buy Custom with OCO Bracket, okay? Now, if I set, let's say, a stop, which I like to look at the downside first. I'm not a negative person, tend to be pretty positive, but I also want to kind of, think about capital size, controlling risk first. So I'm going to go to the pool balls percent dollar amount, and we're going to put the capital that we're kind of working with. Now, when we look at this, we said if we had a $105,000 account and we're going to be willing to put in max 8%, the most we could put in is $8,400. I think most of these we've been doing is between 5 to 8%. 5 to 8% would give you at least $5,000, maybe about $6,500 of capital. So it's really going to be 10 shares. Okay. Now, what I'm going to do, now, by the way, we could have a bigger dollar count, but we're trying to make it where people can practice with lower dollar counts too. 10 shares, Meta, here's the price. We're saying that price or less. There's a limit in which it's able to buy up to, but no more than 623.60. Stop underneath, where? Well, we're going to go back to that diagonal line. Now, we got to be a little careful here, okay? When you're going through earnings, the goal is not to get stomped out maybe prematurely or just on some vacillation of price. So my thinking is on this is trying to give it a little bit more breathing room. I'm going to set that stop down to that prior low, maybe even like down at 590. Now you might be thinking, my gosh, you're nuts. Well, actually, if I took 590, that's going to be about $33 from here to there. $33 on 10 shares of stock is $330. If we lost $330 on an account that's at 105, that is not more than the 0.5% we could lose. Matter of fact, it's even less, okay? So I'm trying to give it more wiggle room, not less, okay? Now you might say, well, geez, what if you get stomped out? I'm still less than what we are willing to risk, okay? Now, when we talk about a target on this, now for some of you that are technicians, okay, now if I just went to the right-hand side and kind of said, where's the top? Let's say we said 630. If I said I was going to measure this pole, that pole from 550-ish, what is that, 80 bucks? The widest. Now, if I took $80 and added $80 on top, it's going to give us 710, okay? Now, what if you don't wear rosy-colored glasses? And I don't either. I like to measure kind of from that second point in. What is that going to do? Well, if you measure from the second point in, the distance between the diagonal line, which you can see now, to where the horizontal line is, the ascending triangle, the target is not going to be as far. Well, if we talk about kind of candles, you got about 585 up to about, let's say, 630. It's going to give a 45-point measurement. Okay? So some people might say, James, I'm going to set mine $80. Well, good luck. Okay? Maybe it gets there. But we're going to set it 45. Now, where'd you get the 45? We kind of went from this 585 to the 630. Why'd you go the second kind of length in? Well, we want to have a greater chance for it to hit. And we're taking the first measurement from an extreme point of the triangle. So we're going to take 630, the horizontal resistance, add 45, and we're going to put a price projection of 675. Okay? Now, if we go back to this, we're going to put that target right there, 675. Okay? Now, we're going to confirm and send. A notice on that, we can read this out loud. Now, remember, it's in the IRA account, 10 shares of stock. It's about $6,200 worth of capital. Noted. Target, sell at that price or higher, or sell that price or lower. Now, I taught the after hours trading for Barbara while she was gone 1 week. This is a good reminder. If you maybe see that Meta is trading above 675 in the after hours, whenever it announces earnings, you might kind of go back to kind of some of that information we talked to and said, I might not have to wait till the next day. Is the market liquid in the after hours? And could I try to get a fill in the after hours? Well, that's interesting. Okay, so just remember what we taught there. Now, that doesn't mean you have to do that. And just might be something you might use with the education we taught. And the stop at 590. Now, remember, on this order, it's a day order. So it's only going to fill from 9:30 Eastern to 4 p.m. Eastern. Not before, not after. Okay? Remember how the stop works? Note that red line right there. If that's okay, we're going to send the order. Now, when I do that, I'm not going to, since we have that Google position right there, I'm not going to add to that, okay? This is a stock class, okay? If we could talk about maybe a different strategy, might bring it up, but we have Meta, which is one of the biggest kind of spaces of communication, and then we have Google, which is one of the biggest stocks in communication. And if we look at the market watch and we go to visualize, if you said, well, James, how on earth would I know this? Well, what I expect you to do is if you go to market watch and you go to visualize, if you say, I forget things, I got a lot going on in my life, okay? That's good. That means you're probably going somewhere. And I literally mean that busy people usually get stuff done. Market watch, visualize S&P 500. Go look at the communication services and the stocks that have a bigger box. Those are the ones that have the bigger market cap. So from today, we have Meta, and then we also have Google. Now, the one that went doink to the upside here today was Netflix. Now, by the way, Netflix, they announced earnings, was up over 1,000. You probably saw that on my X post. And they raised the prices. Oh, gosh. So they're trying to help their own fundamentals. How about that? And the technicals. Now, are there any questions with this? Okay. Yeah, so the comment came in on the position sizing, okay? So the whole point is, when we started this account, I believe it was December 24th, we said, look, we're not going to have anything more than 5 to 8% of the original amount, the 105,000, okay? So if I took 5% off 105, you could do the math. If I took 8% of 105, you could do the math. It's kind of more like a range. If we were more bullish, we might take up to 8%. Maybe if we also had more capital available. If we kind of have a lot of positions, the minimum we're trying to grab, if we can, maybe 5%. Okay, but we're trying to now. If you did all stocks, and you said, and this is consistent with everything we've done in the past, if every stock was 5% of the portfolio, then you have 20 positions. If every stock was 8% of the portfolio, you'd have 12 positions, which lines up with everything that I've said for the last 15, 20 years. In a typical portfolio, it's not unusual to maybe have 12 to 20 positions. It's not unusual, okay? If you did 5 to 8% in each position, you might have 12 to 20 positions. Now, if you do, let's say, ticker symbols, that are groupings of stocks, you might have less and maybe consider putting more capital because you're buying a basket of stocks, not just individual stocks. Okay, so that's where that could vary there. Now, I want to also go down to just real quick is NVIDIA. Now, there was a lot of discussion here today regarding investment in AI from a U.S. perspective. Okay, now companies, for example, like Oracle, okay, got a pretty big pop off that. We also, for example, saw NVIDIA kind of get a little pump off that as well. And by the way, there's many other stocks, okay? But I'm going to kind of target just real quick NVIDIA. Now, when we go to NVIDIA and we pull this up just briefly and we kind of look at some of its fundamentals, and by the way, some of the other stocks in there that we're going to keep an eye on is like Micron, among others. But if we look at, let's say, NVIDIA, you're going to see kind of a little stair-stepping, right? Upcoming earnings, a little stair-step, 84 cents, 91, 102, 115. And you look at this, this is not common to see this, a little stair-step over time, okay? Now, you got to remember one of the risks of growth is if there can be a lot of speculation in what the company could do. How do you know they're going to hit it? You don't, okay? And what you're now going to notice is you got a PE, which is 55, and you got a forward PE, which is 47. So when you see something like this, you can tell there's some pretty high, investors are willing to pay, at least right now, the price for the stock, given the expectation of growth. All right. Now, what we're going to do is I'm going to come back into this. Now, by the way, the PEG ratio, interesting, is only at 0.87. Okay. That's just kind of saying that there's a lot of growth. Now, by the way, when you look at the PEG, it's not looking at the trailing growth. It's looking at the forward earnings per share for the next year. If you get a PEG ratio lower than 1, many investors think that's pretty attractive. The lower it is, the stronger it might potentially be. Now, what I'm going to do is let's go back to this for just a sec. Let me bring up the 3-year weekly chart, okay? When we look at the 3-year weekly chart, this is what it looks like, okay? So now what I want to do is I want to kind of also change the style, okay? Let me go style, and I'm going to bring back just real quick Heikin Ashi candles. Now, the interesting thing about the Heikin Ashi candles, and it's based upon kind of what BJ asked before, right? What this does is it filters out the noise. And what you're going to see is when the price runs up and it makes a higher high, it pulls back, and we could see really the higher lows. If the price runs up, makes a higher high, pulls back, and it makes an equal low, okay? And then it runs back up, does not make a higher high, and then pulls back, and actually slightly makes a lower low. Now, one of the things that I teach that's maybe different than some is I always talk about if you see a stock break support, only to see it snap back above, call those V patterns. And those are very strong bullish signals. Many people don't teach those, but I've seen so many of those. The V patterns those are also seen when you get W patterns. They appear to be broken support, but only quickly they get back above that old, what should be resistance, and it fires back to the upside. And it's a kind of an interesting setup. Now, what you're going to notice is when you look at this, just over time, there's just been some higher lows on the chart, right? I'm circling a red and green candle, red and green candle, red and green candle on every one of these. That's the pattern. And what you'll notice is if we kind of draw the line on a high majority basis, if it made a higher high, it actually made a higher low. And if we look at kind of the angle of the trend line, if we kind of connect the dots now, on the right-hand side, we can kind of see that this is like bull flag-like, okay? We see a little run up in the price and a little flag or fleeg if you're Canadian. And what you're now going to notice is, hey, could we be getting to the extreme point where it might get to the point where it might try to break out? Now, a comment that I said yesterday, a lot of people are fearful of earnings, but some investors like to kind of look for some examples, maybe 3 to 4 weeks out from earnings. Why? Because people can see when the earnings are, and they start to speculate which companies might do well. They might buy the shares or something else and speculate on what those earnings could be. Okay? Now, so here we are. We're about 4 weeks away. And what we're now going to do is if you go back to the 1-year daily chart and we're going to zoom in, some pretty strong movements here to the upside, okay? And also with the semiconductors getting a little push here today, could that group that's finally, okay? Now, I joke with Kevin Horner about this every Friday when he says, what do you think of the semiconductors? Kevin, stop asking me this about semiconductors. They haven't done anything in weeks, okay? Now he's going to ask me again. Finally, it did something. So a brand new high here on semiconductors, and one of the main stocks in that space, semiconductors. Now, let's go to MarketWatch for just a second. Let's go to Visualize. Let's just real quick go to the NASDAQ, okay? Now, when you look at the NASDAQ, we can kind of see, are there any semiconductors in here? Now, I'm telling you, a lot of people love to run searches, okay? But I'm going to spin it back to you. I want you to become a visual searcher. This is a visual search, okay? When you think about NVIDIA, semis, okay? At Broadcom, AMD, okay? QCOM, ADI, Marvel, TXN, Micron, Intel, right? They're right here, okay? Now, in the world of the stock market, if you do more work, they don't give you more money. So sometimes we're kind of missing some of these things that are right in front of our face. And we kind of want to make it complicated. We're not going to make it complicated. We're going to go look at one of the bigger names, okay? And then what we're going to do is we're going to go look and see, could that trend continue? Now, what I'm going to do is on this is the investor might say a comment such as, has this gone too high? Well, let's go back to one of our tools that we've used for a long time, okay? Now, what is one of the tools that we kind of talk about to gauge, is it up too much, or, how high is it? Well, we use what's called the moving average envelopes, okay? Now, it's just kind of, now remember, we always kind of say that the common denominator of our trades, examples, is the price above the 10-day EMA, okay? Well, the 10-day EMA is the blue line, okay? So we can see, yeah, the price is above it, okay? So what is this line? Well, what it does is it creates another moving average that is 3% above the 10-period moving average. Now, if you could buy a stock above the 10, but not more than 3% above the 10-day moving average, you're getting close to support. The red line is really 5% above the 10-day moving average. Not that close to support, but it's getting a little elevated. And the white line, what you're now going to see is if you get 7% off, or I should say above the 10-period moving average, you're getting a little elevated to nosebleed levels. Now, do stocks tend to get that high? And if they go there, do they tend to stay there? You're a trader. Think of the 10-day moving average as like the high probability zone of where the stock is likely to be. And if you deviate away from that, you get into one of the tails, up or down, it's likely to snap back down. Now, back to BJ's comment. Okay, by the way, everyone thank BJ for the question. So when you got this stock NVIDIA where it gapped up like this and someone said, oh my gosh, this is the greatest thing ever, NVIDIA gapped up, and you pulled up this chart, if you get the price above the white line, what should you expect? You probably expect traders to sell, sell, sell. And why do they sell? Well, when you're that elevated off support, it's probably not a great deal in the shorter term. And a lot of people say it's likely to revert back down to the middle or the 10-day moving average. Okay? So if you see a stock, now if I pulled this up just real quick and said, hey, what did Netflix do? And why did Netflix sell off? Well, remember, if you look at that, there's the white line. Netflix went way up above that. So if you get a price, now remember, how many times did it do that? It did that once right there, and the price consolidated. The price rallied up to that 7, up above the 7% envelope, and it kind of consolidated, okay? But to get above that is not very common. And so when the price does that, investors are saying statistically, we don't think it's going to hold. We think it's going to consolidate at a minimum to pull back. Now, why are they selling? Well, because it's way off support and they have big profits. Are they saying they're never going to buy it again? Of course not. That's not what they're saying. They're just saying, look, it's way off support. Now, I want you to imagine your house is $1 million. Someone knocks on your door, okay? And they said, hey, my name is Bob. I love your house. I'll give you $1.5 million for it. And you're like, but it's only $1 million. Take the briefcase of money, $1.5 million, just walk out the door, right? So if someone comes and gives you something that's so far and above what someone was willing to give you the day before, just like in the world of stock market, you might say, geez, that just doesn't happen very often. I might just kind of sell it into the pop and try to let it come back down and buy it or try to buy it closer to the support. You can kind of tell that's logic, but you can also understand there's part of that that's emotion as well. When that stock opened up at 999s today, $1,000, okay? There's like that emotion of like, did you see it? Did you see it? Okay, it's amazing. Now, let's go back to NVIDIA. Let's put this on. Now, for example, if you said, I would like this chart right here to kind of gauge, and by the way, let's kind of just verify something just real quick. So what you're going to notice is there's the 10-day moving average. Okay, fine. What you're now going to notice is one of those, you're going to see that there's a 3% above. We talked about that. That's the yellow line. The red line is the 5% above, and the white line is 7%. So 3, 5, 7 is 3% above the 10, 5% above the 10, 7% above the 10. And what it does is it just creates an envelope. And the higher you go above, okay, the higher percentage you get above the 10-period moving average, the higher statistical chance you have to revert back down to support. Now, let me send this out to you, okay? I'm going to click on share, click, and let me just put into that, okay? Now, if I pull this up, what you're now going to see is I just sent that to you in the chat. Now, the one that we're going to do, so if we looked at this and said, hey, are we getting a little deal on this? Now, we've done NVIDIA before, okay? And what you're now going to notice is, and we might have it in the margin account, I have to double check. We can't say that we're getting a deal. Matter of fact, it might be a little elevated. And if we're kind of saying, look, I want to try to buy it a little less. So if you had bought the stock historically when it was above the red line, you really got to count on some good momentum, okay? When it got above the red, it kind of consolidated. So when you're buying it above the red, you got to really be thinking, this could still go. From some traders' perspective, they might say, I am not going to buy a full position. And this is where you can kind of use your experience and say, hey, if I'm above the red line, I want to leave some capital to where maybe I could try to buy some if it were to go down a little less. So first off, if I said, hey, I'm going to try to buy right at the red line, that's right at 146.04, okay? Now, if I type in 146.04, okay, it's a limit dated GTC. Now, for time's sake, I'm going to go to only put in a half position, okay? Well, where do you think we're going to put in the other half based on what I just talked about? Well, the investor might say, James, I'm going to try to buy the other half if we just kind of fell down to maybe the yellow line. Where's the yellow line? Now, could the moving averages act as potential support? That's the most common fundamental thing we learned from day one. Doesn't mean we do it. But if we just said, hey, wonder if we tried to set up an order right at the moving average. The second order is going to be at 143.39. Okay? Now, what I'm going to do is also going to set the stop below support. If we think that 10-period moving average could be support, 139.18, less 2% or so, we're going to set that stop at 136.39. In wrapping up, okay, so 136.39, and I'll repeat where that second order, 136.39, okay? So this is the first order. We know we're buying a little bit more elevated. We can gauge that. If that were to go in, which we'll send it, where might be the second order for the potential entry? A, try to buy it a little bit closer to the moving average. You're going to try to put a second buy limit order right at the yellow line. Okay? All right, I'm out of my time here today. Our focus was on communication. I don't know if you noticed that. And we kind of talked about the NVIDIA. We talked about Google. We talked about Meta. Let's look and see if that growth can't materialize. Now, also, I want to kind of say in closing here that with what we discussed here today was done for example, illustrative purposes only. I want you to go out and look for companies that are really having above average growth relative to its industry group. Think about how the companies that you're looking at, can they be easily duplicated? Like the example I gave with Home Depot. I also want you to kind of go back and practice those stocks using the moving average envelope. Do you notice any patterns? Okay. And also, where do you buy stocks? Go back and look at some recent entries and diagram that with the moving average envelopes. You might be surprised. Okay. Now, also remember with what we talked about here today, all investing involves risk. Thank you for attending the class on trading growth and value stocks. I will also post in the chat the link to our YouTube page and our class as well. Thank you so much. I wish you a great day. Stay tuned for our class coming up tomorrow morning on futures. Have a great afternoon. We'll see you back tomorrow. Take care. Bye-bye.